makers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and markets gearing up for a series of Fed cuts, beginning with what's expected to be a surefire quarter-point cut on Wednesday. The U.S. Central Bank has been under intense pressure from President Trump, who's in the process of choosing the next Fed chair.
I have three people that I like a lot. Any one of them would do a good job.
Mr. President, one more on Venezuela.
But I think you have a big cut because I don't think he can help but cutting. It's perfect for cutting. And the thing that he's hurting most is housing for people. But because we're doing well in everything. Energy's way down. Groceries are down. Everything, almost everything is way down. But housing, because of the Fed, is not what it should be.
Well, we're joined by Bob Michele, Chief Investment Officer and Head of Global Fixed Income for the Currencies and Commodities Group at JPMorgan Asset Management. Bob, so great, first of all, to see you here in London and on Fed Week. So you're expecting 25 basis point cut on Wednesday from the Fed. I mean, is there a chance that they go 50?
Happy to be here. For sure, there's a chance they go 50. But they only go 50 if they feel they need to surprise the markets. Right now, they know the market's geared in at 25 basis points. It seems like a done deal. For sure, there will be a couple dissents who want to go 50. There may also be a couple who don't want to do anything. But expect 25 and expect no real surprises there.
How worried are you about the labor market?
Pretty worried. It feels like corporate America has just decided they're going to pause everything on the labor market. They're not necessarily firing people, but they're also not necessarily hiring people. So you get this attrition, you get the soggy labor data. Everybody's waiting to see what the final shape of tariffs is and the ultimate impact.
Bob, how many dissenters are you expecting? So will it be, if you look at the dot plot, is it going to be most people voting for 25 basis point cut, or is there a danger that actually a lot will have voted for no cut and 50, so it kind of murs the water a little bit?
Well, Goolsbee and Schmid will be the two that might vote for no cut. And then you should have a handful of people. I don't know if it's two or three. We'll see if Steve Miran's part of the equation. But you should have two or three that vote for 50 basis points. But the vast majority will be 25 basis points.
Bob, how do you interpret actually a lot of the central bank independence worry? So this is largely ignored by markets. There are question marks over Lisa Cook. There are question marks actually over the constant pressure that comes from the president. Does it sway one way or the other, or actually FOMC?
Are the central banks truly independent? They're political appointees. I think for sure, once they're on their central bank, it could be any of them, they do in their best interest what's right for the economy, what's right for the markets, and they try to balance all things. There's no doubt in my mind that these are quality people. But they get appointed because of their views and biases. Nobody's looking to appoint the next Paul Volcker who's going to come in and say, stop the madness, get the liquidity out of the system. So it depends who you appoint, their biases, their beliefs, their views. That's going to tilt central banks in one direction or another.
Bob, that's different to constant pressure from president where you could be worried about retaliation.
Yeah, I think there is some concern about that. I'm not sure that the Fed has to worry entirely about that. And I know Lisa Cook's under a lot of pressure. But by and large, I think the appointees go in and they do what they think is right.
Bob, hold that thought. We're going to go also to China to understand some of the things that we'll talk about in terms of trade, but also TikTok. We also have some breaking news. China saying the preliminary probe that has found that Nvidia violated anti-monopoly laws. So the U.S. has also made good progress in talks with China. That's according to the U.S. Treasury Secretary Scott Bessent. Discussions have resumed in Madrid after the first day covered issues including trade and the fate of TikTok. President Trump says the talks are going fine, but that TikTok's fate will be determined by Beijing's actions.
They're negotiating TikTok right now. We may let it die, or we may, I don't know, it depends, up to China. It doesn't matter too much. I'd like to do it for the kids. They like it. I mean, selfishly speaking, I did very well on TikTok, and I got the youth vote.
So with us, James Mager, Bloomberg senior reporter for the Chinese economy and government. There are three main stories, James. Of course, it's what's happening with TikTok, trade, but also this breaking news, China saying that the preliminary probe finds Nvidia violated anti-monopoly laws. What exactly does that mean? What are the implications of this?
I think the timing of this is not coincidental. The Chinese have launched two investigations over the weekend looking at the semiconductor sector. They've also just announcing this Nvidia news as I came onto air. So it's very unclear what this is actually going to mean for Nvidia. But I think basically what the Ministry of Commerce in Beijing and the Chinese government more broadly is doing is saying, obviously, Trump, wants to do a deal on TikTok. We also have these various tools in our arsenal that we can threaten U.S. semiconductor companies and also Taiwanese companies like Nvidia. The U.S. should be trying to make a deal with us in Madrid on what is being negotiated there right now. Obviously, you're seeing it's much broader than the semiconductor sector, though. China has made no purchases of soybeans so far this year. Usually, by this point, the Chinese COFCO and the other state-owned commodities companies would be out buying soybeans as the U.S. is starting to harvest those. They haven't done that this year. That's another tool that that Beijing is holding over Washington's head to try and force a trade deal, to try and force a reduction in tariffs. And I think all of these different investigations by both sides is an attempt to put their thumb on the scales in those talks and try and get a better deal for each of them. So what it actually means for any individual company, it remains to be seen.
Yeah. So overall, I mean, is this in the context that you think talks in Madrid have been pretty positive, or they're starting? They could promise something more concrete.
I think the last two rounds of talks we've seen, they've come out. It's been pretty positive talk, but there hasn't actually been any real change. The US got rare earth magnets exports restarted in the London talks, and then in the Stockholm talks, they agreed to extend that. They extended tariffs. They China agreed to continue exporting magnets, but there hasn't really been any kind of pullback from the levels we have on tariffs. So maybe both sides are now seem to be upping their game, putting pressure on different sectors, not just trade with tariffs, but other things as well. Maybe that will lead to a breakthrough on tariffs or reduction of US tariffs. Maybe it will lead to a breakdown of talks. Again, it's going to be hard to see. And remember, after the Stockholm talks, we didn't really have the Chinese come out and said they had a deal. The US didn't confirm that deal for almost 2 weeks until Donald Trump actually came out and said that yes, that something had been agreed. So far, Scott Benton sounded so positive when he spoke to the media earlier today, but we may not even find out today really what has been agreed and whether it's broadly positive or not.
James, thank you so much. And of course, we'll have plenty more on TikTok throughout the day. James Mager, Bloomberg senior reporter for the Chinese economy and government. We're back with Bob Michael. Bob, we're talking a little bit about what your expectation from the Fed was, questions about central bank independence, especially on the Fed. Overall, what's your take on China? What does that mean for how the Fed also thinks of things?
Well, certainly what we're seeing today is part of the negotiation process, but it's a negotiation process that's been going on for over half a year. It's very difficult for corporate America to put in place business plans for the next 12, 18, 24 months unless they know exactly what tariff policy will look like. It helps to explain some of the gridlock that we see in the labor market. And you go back to the Fed, it is something that worries them. If they see corporate America in an extended pause for a while, that will put a lot of pressure on the labor market.
Bob, how would you describe actually the U.S. economy and the global economy right now? Are you, concerned that there are risks to the downside? There's also a court that will have to pronounce itself on the legality of the tariffs. That could change everything.
So the U.S. and global economy are doing surprisingly well. If you go back a year and said, you're going to have a minimum of 10% baseline tariffs, and they are being collected right now, and the U.S. is going to cruise through right around trend line growth, and inflation will be a little elevated, and the rest of the world will be doing okay, but no recessions anywhere, I think people would be very surprised. So you have to give corporate America and corporate Europe and the rest of the corporate world a lot of credit for being able to manage around these issues. Do I get concerned that tariff policy will be very aggressive? That will cause businesses to absorb more costs and push some through, and you'll get slower growth? Yeah. Do I think it pushes us into recession? No, I don't think so.
what's been happening with, when you look at treasuries, but just the long end of the bond market in general, it's been, pretty messy. Has it been oversold?
Yes, it looks cheap to us. And in fact, in the last week, we've gone in and we've repositioned some portfolios to take advantage of that. We also have to understand, to some extent, when central banks are bringing rates down, yield curves always steepen. We're getting back to an environment that existed pre-Great Financial Crisis. And that's a lot of movement in the curve, a lot of movement around yields. Yeah, there are some concerns about the U.S. spending and borrowing and funding that with treasuries. But we also forget the Treasury has a lot of tools to bring that funding forward in the curve. So right now, the long end of the curve looks like the cheap spot on the curve for us. So,
for example, if for a 30-year Treasury yield, where should it be, or where do you see it going?
Well, I think anything around 5% or over 5% looks pretty cheap. I think if you expect the Fed funds rate to come down to about 3.5% over the next 4 meetings, then you would expect the 30-year to come down to around, 4.25%, 4.5%.
Well, anything else you like, or you'd be buying right now?
Yeah, we're still buying a lot of credit. And we look at corporate America and we model 10% flat effective tariff rates and 20%. And you know what? Even at 20%, you don't have a recession in the U.S. For sure, revenue growth slows down. For sure, profit growth slows down, but not enough to push you into recession. So as long as there's no recession, any backup in credit spreads, we're buying. And I know everyone wants to buy them cheaper, but there's a lot of money on the sidelines waiting to come in.
High yield, investment grade, or you buy everything?
Both of them, and emerging market debt. So we're going where the yield is. Central banks still in a cutting cycle are not what bond bear markets are made of.
I mean, emerging market, again, debt offers good value, but is that for good reason? Because there are also many risks. So are there specific countries that you want to get into?
Yeah, we're looking mostly at local emerging market debt. We like a couple of things there. We like the high nominal yields. We like the high real yields. We could put together a basket of a handful of countries like Mexico, Brazil, Poland, Czech. You can mix in South Africa, Turkey, Indonesia. You get a yield of over 11%. And you have central banks that are still bringing down rates. Now, if you try to hedge that back to dollar or euro, you're going to give away a lot of that yield. But right now, it feels like the dollar has more correction to undergo, so we're not so worried about holding non-dollar currencies, particularly in the emerging markets. And emerging markets have been unloved for the last couple of years.
What about French bonds? And I don't know whether that links back to the ECB or is there any value in Europe?
The value's getting there, but you need to see some sort of policy shift or announcement come out of France that gives us comfort to go in. So right now, there's so many other things to do in the bond markets globally. France is not one of the things we're focused on. We're watching it for sure. It's getting cheap. 10, 15 years ago, we never thought you'd see France and Italy trading at roughly the same yield, but here we are.
Here we are. When you look at the Bank of England and when you look at UK assets, where are you expecting gilts to go?
We think gilts ultimately will come down a bit in yield, but we don't think the bank starts cutting rates again until, say, the spring. I know there's some expectation they'll do it before year end. We don't see that.
And so when you look at the curve, where do you buy?
Again, you want to push yourself out a little bit. So somewhere around the 10-year makes sense to us.
And do you spend a lot of time actually thinking about the UK and the budget and some of, maybe the self-harm that's also been imposed?
Yeah, I've been here now for 2 weeks. I'm sitting in the midst of a very large UK team.
We gave you bad weather just to get you in the mood.
And let's not forget the tube strike. So I had a lot of stuff last week and this week. We think a lot about what's going on in the UK and how they adopt policy. And, there's an unsolvable riddle about how do you cut spending or raise taxes when you really can't do either.
How much actually, the way that markets go will depend on that autumn budget?
I think a lot.
Okay, Bob, thank you so much for joining us. Bob Michael,
pleasure to be here.
They're Chief Investment Officer and Head of Global Fixed Income for the Currencies and Commodities Group at JPMorgan Asset Management. Now, coming up, we were talking about French bonds. They're rallying after initially underperforming against their German counterparts. This follows a credit rating downgrade from Fitch due to recent political turmoil in the country. We'll have more details next, and this is Bloomberg. Well, French bonds are rallying after initially underperforming against their German counterparts. This comes as Fitch cut France's credit rating following recent political turmoil. Meanwhile, France's new Prime Minister, Sébastien Lecornu, has dropped plans to cut 2 public holidays, but warned the government will need to find other ways to reduce its budget deficit. Now, for more, we're joined by Jean Dalbar, economist at Bloomberg Economics in Paris. Jean, thank you again for joining us. So Fitch's downgrade put France on par with Belgium. Talk us through Fitch's decision.
Well, Fitch downgrade reflects basically medium-term fiscal issues for France and short-term implementation risks. On the medium term, France is facing rising debt servicing costs and increased military spendings, and all of that will require at least 100 billion of fiscal consolidation to curb the deficit and to comply with French European commitments. And so that's the medium-term risks. And over the short term, the implementation is complicated by a fragmented parliament in France, which makes it harder to strike a deal on the budget, and which obviously make it even harder to implement the necessary structural reforms that France's economy needs. So that's a complicated background for France. And all of that with very tight deadlines, because the new Prime Minister needs to present a budget to Parliament in early October.
So the new Prime Minister has made this concession on public holidays, but they also need to find other cuts. What do you think that the budget will bring?
Well, absolutely. I think that Fitch decision will put enormous pressure on the government to make concessions to the Socialist Party, which is the center-left party, which is the key for the budget talks. And we think that it will make 2 main concessions. The first one will be to decrease the size of the fiscal plan from roughly 44 billion euros to something like 30 billion euros. And the second kind of concession the government will have to make is to create a new form of taxation to ultra-rich citizens in France. That's something the Socialist Party is really, really looking for and waiting for. And so we expect difficult negotiations ahead, as I said, with tight deadlines, but also with credit rating agencies lining up in the coming weeks and months.
Jean, thank you so much. Jean Dalbar, their economist at Bloomberg Economics. Now, U.S. Secretary of State Marco Rubio is in Israel just days after an unprecedented Israeli airstrike targeted Hamas officials in Qatar. Despite the strike, the Israeli Prime Minister Benjamin Netanyahu says ties with the U.S. have never been stronger.
I think his visit here is a testament to the durability, the strength of the Israeli-American alliance. It's as strong and as durable as the stones of the Western Wall that we just touched under President Trump and Secretary Rubio and their entire team. This alliance has never been stronger.
Now, for more, let's bring in our Jumana Bersetchi. Jumana, Secretary of State Marco Rubio meeting Netanyahu. What's top of the agenda? I imagine it's, of course, that strike.
Yes, absolutely. And perhaps limiting some of the diplomatic fallout after the strike, given how many countries from the region and around the world condemned Israel for the attack on those Hamas officials in Doha. It should be said, though, that this Marco Rubio visit was actually planned even before the strike took place. It is a 2-day visit. Yesterday, largely ceremonial, the Secretary of State alongside the Israeli Prime Minister Netanyahu, you just showed footage a while back, they visited the Western Wall along with their spouses. But today they are going to be holding a press conference around 2 p.m. local. So we'll see what comes out of that. But prior to the visit, the Secretary of State did say that his aim was to figure out exactly what Israel's endgame is in Gaza and to reiterate the U.S. administration's policy, which is they want to negotiate a ceasefire. They want to get a ceasefire deal across the line to ensure the release of the hostages, about 20 of them still thought to be presumed alive. But of course, this is all happening in tandem with another summit that's taking place in Qatar. Qatar has brought together the foreign ministers of many Arab and Islamic nations. They've all met to pledge solidarity for Doha in wake of the attacks, condemning also Israel's what they say is encroachment on Doha's sovereignty, but then Doha also reiterating that they're willing to continue with those mediation efforts alongside the U.S. to secure an end to this conflict.
And President Trump also spoke with the Qatari Prime Minister.
That's right. So prior to this Doha summit taking place on Friday, the Qatari PM traveled to the U.S. He did also have a meeting with the Secretary of State, Marco Rubio. In the evening, he had a dinner with the President Trump alongside Steve Witkoff, the special envoy to the region. There was no formal readout of the dinner. It was just a dinner. It was about a couple of hours long. But an attaché to the Qatari embassy in Washington did say that it was a very successful dinner. And then yesterday, President Trump was asked about the relationship with Qatar, where he reiterated that Qatar is still a very strong ally to the United States. And he went one step further and said that Israel have to be very, very careful with these military attacks that they're carrying out in the region, specifically because Israel have also said and repeated that they are willing to target Hamas operatives in any country, that no country is immune. And so that was taken as a bit of a threat to many of the countries in the region, particularly those like Qatar, like Egypt, who are keen to continue with these mediation efforts. So perhaps as far as it pertains to the Qatar-US relationship, again, the visit has been seen as one route to paper over the diplomatic damage that was done last week. But still, lots of questions, and still the region is very much on alert after the attack that took place.
Jumana, thank you so much. Bloomberg's Jumana Bersachi there with the very latest on the Middle East. Now, a Turkish court has adjourned a hearing into alleged vote buying that could threaten the leadership of the country's main opposition party. The opposition claims the case is part of President Erdogan's attempt to consolidate power. Now, the political uncertainty had caused Turkish stocks and bonds to fall, with markets on edge as they await the ruling, while Turkey's lira has erased an earlier drop. And Donald Trump says he's ready to impose major sanctions on Russia if NATO countries do the same. The U.S. president's patience with Vladimir Putin is wearing thin after last month's summit in Alaska failed to result in a ceasefire in Ukraine. While President Trump has called on NATO to impose up to 100% tariffs on China for buying Russian oil, but said allies, including Hungary, must also stop buying Russian energy.
Europe they're my friends, but they're buying oil from Russia. So we can't be expected to be the only ones that are, full bore. But Europe is buying oil from Russia. I don't want them to buy oil. And the sanctions that they're putting on are not tough enough. And I'm willing to do sanctions, but they're going to have to toughen up their sanctions commensurate with what I'm doing.
Coming up, we discuss what the latest data out of China tells us about the country's economy, as well as the negotiating tools that Beijing has at its disposal as it continues talks with the U.S. That's next, and this is Bloomberg. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. China finds Nvidia violated anti-monopoly laws after an initial probe. The ruling comes as Beijing and Washington hold talks in Madrid. President Trump keeps up the pressure on the Fed, saying he expects a big cut this week as global stocks hover near record highs. Plus, French bonds underperform after Friday's Fitch downgrade following recent political turmoil. Now, the latest China data today suggests an economic slowdown, with industrial output and consumption having their worst month yet this year. This comes as Chinese and U.S. officials continue their trade talks in Madrid, where agenda topics include the ownership of social media platform TikTok. Well, joining us now to discuss all things China is Keyu, of course, author of the New China Playbook, professor of finance at Hong Kong University of Science and Technology, and one of the greatest minds when it comes to understanding China for foreigners. Keyu, as always, thank you so much for joining us. Look, there's a number of things that we're trying to figure out, the relationship between the U.S. and China on semiconductors, on trade. But what exactly does President Xi want and need today from the U.S.?
China is pressing back. They're not in a rush to get any trade deals done. Of course, uncertainty is weighing down the economy. Both sides believe that there's no point in escalating, but there need to be some red lines. For instance, technology, restrictions, export bans, these are really front and center for China, and really kind of just on, reducing the uncertainty between the two countries, taking the temperature down.
What do we most misunderstand actually about China? Because when China speaks, is it, to the foreign media, or is it really also to continue its grip in China?
Well, China believes that it's in the position of strength, domestically and internationally, despite what's going on with the economy. And that poise is really important on carrying negotiations with the U.S. And there's leverage, right? Rare earth is a leverage. It's not maybe the wisest thing to use, but they're using it. And they're saying, look, U.S. needs China. The supply chains can't be further disrupted. They're embedded in each other. So let's take it forward, but in a way that doesn't disrupt Chinese domestic politics, Chinese state enterprises. That's a no-go.
What about semiconductors? Again, we had about half an hour ago this headline saying China says preliminary probe finds that Nvidia violated anti-monopoly laws. Is this a negotiating tactic?
I think it is a wider policy tool, or wider negotiating tool, where saying, look, U.S. is probing into Chinese tactics, but is U.S. practices fair? It's probably unfair on both sides, and they want to use this to push forward and say, okay, what's the balance that they want to strike? So it's a broader. Also, there's anti-monopoly, anti-involution policies in China. What's really fair practice? Is it just really one-sided, or does China have some say as well?
Keyu, I know you said that China's strategy is not confrontation. How difficult is it not to be confrontational when you're dealing with the Trump administration?
Well, I think China's side has managed this pretty well, very calibrated. They've had many years to think about this since Trump 1.0, many years to prepare. It's assertiveness, but it's calibrated, but it's measured, it's managed. I don't think they've taken it down a worse path, but it's really to say, look, what scope is there for countries to work together?
How should we look at the Chinese economy right now?
Still tested, I'd say. Resilient in some ways if you look at the macro numbers, but still tested by deflationary pressures, real estate way down. But what I found out this summer was that there's a real dichotomy between how good high tech is, how really strong high tech is going forward. DeepSeek is really only the beginning, but how weak the micro level economy is on consumption, all that. They're leaning off of policy, but is there an endogenous engine to carry this forward without policy measures support? I don't think it's there yet.
DeepSeek was a real eye-opener for many people that kind of watch China from afar. Yeah. Could that be replicated in other parts of the economy?
DeepSeek is really only the beginning. There are small and big DeepSeeks in different sectors. You look at robotics, and China's path going forward is integrate deep services and innovation with manufacturing. So it's not just going to be an export of goods, but embedding these R&D, IP, high tech, all of that. That's a new model. And they're really going after a drastic cost-cutting innovation, which actually complements the U.S. But in the end, innovation is about diffusion, adoption, not just about the breakthroughs.
Can you talk to us about consumption? So how is the China consumer changing and adapting?
Yeah, it's funny. There are two things that simultaneously exist. One is a little bit of consumption downgrading, more like value for money, more online purchases. At the same time, they're being more selective, upgrading to health, beauty, and digital. And by the way, we should not write off China's consumer market. It's 90% of the U.S. is in certain goods is 95% of U.S. market. There's still room for growth, but discretionary consumer spending is still very low. And that's where there's a lot of room. Think about services. That's an endless pool of growth to be seen. And we've seen a little bit of bright spot on the services too.
What do the Chinese actually think of the tariffs imposed by Donald Trump? Is it talked about in China? Is it something that would make them angry longer term, or have they found workarounds?
Well, they can now blame it on Donald Trump for the weak economy, whether it's correct or not. And second, it's all about rerouting, resilience, adaptation. That's the Chinese mindset. If you think about technology, it's the same thing. If you think about tariffs, the same thing. They're diversifying. Everybody wants to go global. It's actually pushing Chinese companies to think globally.
Do you know? I mean, do you have any insight into how President Xi and President Trump, how they get along? If they get along, if there's like mutual, if not admiration, some kind of bonding.
There might be a little bit of that. I think from President Xi's perspective, President Trump is kind of easier to deal with in that sense because they talk about deals. They talk. You can negotiate. You can push back and forth. They understand kind of the parameters, or they think they do. Whereas some of the Democrats, it's very ideological. It's harder to gauge. Yeah.
Keyu, thank you so much, as ever, for joining us
today.
Keyu Jin, they're author of the new China Playbook and professor of finance at Hong Kong University of Science and Technology. Now, Bloomberg has learned that Brookfield Asset Management is in talks to acquire the U.S. landlord Yes Communities from Singapore's sovereign wealth fund, GIC. Now, sources say the entire portfolio could be valued at over $10 billion. Denver-based Yes is among the biggest operators of manufactured housing communities in the U.S. And food inflation in the UK is expected to climb to 5.7% by December, driven by regulatory costs. That's according to the Food and Drink Federation, a group that represents the industry. This marks a big increase from its previous forecast of 4.8% given in March, and the Federation is calling on the government to help reduce costs. And the U.S. and Britain will sign an agreement to make it quicker for companies in both countries to build nuclear power stations when President Donald Trump visits this week. That's according to the U.K. government. Now, the nuclear partnership is one of the several economic deals that the Prime Minister Keir Starmer intends to announce in order to stop Mr. Trump's visit, or President Trump's visit, from descending into diplomatic difficulty. Well, Bloomberg's Rosalind Matheson and Ruth David, our London bureau chief, are both here. There's a lot to talk about. There's the U.S. and the U.K. But Ruth, I mean, when you look at all the details coming out about the deals, what can we actually expect from the state visit?
And they're talking about around 50 billion pounds of deals being signed. They're focusing on the fact that some of the big financial companies, so Citigroup is saying they're going to be investing more in the UK. Bank of America is talking about increasing investments, hiring more people. And you've got the tech companies, so Nvidia, OpenAI might be announcing new investments. There are quite a few sectors that the UK government is trying to focus on. Interestingly, and we and others reported how the tech deals, Peter Mandelson, who of course Prime Minister Starmer is facing plenty of pressure from his party members over, was one of the architects of the deal. And this was meant to be this huge triumphant visit and a sign of US-UK ties being stronger now. But it couldn't have come at a worse time. We've also had news over the weekend about Astra pausing a $200 million investment that it was planning to make in Cambridge.
How much does the Peter Mandelson affair actually, how much of it will be a massive distraction? Because he didn't resign, they had to fire him, and it kind of overhangs everything.
Absolutely. And it also looks into the fact that President Trump is facing pressure in the U.S. about his links to Epstein. And you can imagine that there's going to be a press conference where they will be asked about this. And how do they navigate that? I mean, the Mandelson resignation and what it says and what the media is saying about Prime Minister Starmer's judgment coming on the heels of Angela Rayner having to go because of her underpaying taxes when she was the housing secretary on her own house. It's really a bad look.
Roz, what can you tell us about what the U.S. is expecting from this visit? And again, it comes at a difficult time from Donald Trump because of the Charlie Kirk assassination. And they have like a fraught relationship with the U.K.
Yeah, as Ruth was saying, a lot of it is about business because Donald Trump will want to see US companies front and centre. He wants to see that they're going to get opportunities to do business in the UK that's going to benefit them, and also vice versa. So the idea behind this nuclear deal is that you use each other's safety assessments to speed up licensing. So it's basically about getting money going and very quickly. And so he'll want to see all those lined up in those announcements this week. He also would like to see, he's a guy who likes pageantry. So he's going to expect to have, a lot of that when he is received by the royal family, by the king. And that's one card that the UK government can play there is we all know that Donald Trump does have a fondness for the royal family. So there's that. But what does Donald Trump want? It can change in the minute. What did he decide to talk about in the minute throughout this entire week that he's here? Is it about Epstein? Is it about UK politics? Does he use UK politics to make a point? Again, you talked about Charlie Kirk and his his killing. Does he, while he's in the UK, decide to comment on some of the issues here that are going on around migrants, social media, the conversation that we're seeing here that's being magnified at the moment? Does he talk about disinformation in the UK? So does he wade into domestic US politics, not just about Epstein and Mandelson, but also to use that to try and make a point back home about Charlie Kirk?
Yeah, and again, very delicate time for Keir Starmer because we had these huge right-wing demonstrations in the UK over the weekend.
150,000 people in London, far more than the organisers were expecting, and most of them pro, as they're saying, free speech and all of that. But also remember, Elon Musk spoke to this gathering via video link, and he was talking about how the UK government, and the problems with it, and that do they need to be in power for as long as they are predicted to be. And I think this comes in the backdrop of a lot of the UK media over this weekend have been talking about the local elections in May and what that means for the Prime Minister. Does that really set the starting gun on, your time is up? Because there's been so much of discord. This government was supposed to be the contrast to the Tories and the chaos of that time. And it's really seeming like every week they're lurching from one crisis to the other.
Yeah, and to Ruth's good point, I mean, just a couple of, quarters ago at Munich Security Conference, it was clear that Elon Musk was attacking the UK for what he called, a lack of freedom of speech. What do we know about the rift between Donald Trump and Elon Musk and how that influences their thoughts on the UK?
Well, Elon Musk has gone pretty quiet in terms of his relationship with Donald Trump and vice versa. So they're not spending a lot of time together from what we can tell. They're not commenting about each other on social media so much anymore, whether that's a tacit understanding after they had that very big blow up, earlier in the year. Is it also Elon Musk just saying, I'm going to actually retreat a bit from politics and focus on my businesses? We know he's got potentially an incredible payout if he starts to hit goals back at his core businesses. So has he made a conscious choice around that to sort of separate himself from Donald Trump a bit? Obviously, Sam Altman is here this week, and Elon Musk and Sam Altman, they have history and none of it's good. So is Sam Altman now the new Elon Musk in terms of having Donald Trump's ear around some of these issues? But certainly Elon Musk still has a massive base that he talks to in America. He's got very powerful social media platforms at his disposal, and he feels very free to come in and comment on other countries' issues, challenges, and the way that they're managing, to Ruth's point, some of the protests that we've seen here lately.
Ruth, from a business point of view, having AstraZeneca pausing $200 million investment, it feels like they're going cold on the UK, which is the last thing you want to be showing the American CEOs when they all come into town.
Especially given that it is a domestic blue chip UK company. This comes on the heels of Merck saying last week that they were going to back out of a $1 billion investment in the UK. And there is all of that discontent in the background around UK drug pricing rebates, where the talks with pharma companies and the UK government fell through. Now, this is a topic that is very close to President Trump's heart. And, he wants equal pricing across countries because he's saying they kind of use American innovativeness and they take that for granted. So you can imagine there will be more conversations around that. But the CEO of GSK is going to be at a gathering we hear that Prime Minister Starmer is hosting, along with the CEOs of Microsoft and Rolls-Royce. We had the story on Blackstone maybe committing another $100 billion to the UK in the next 10 years. So they are trying to push back at it. But this narrative seems to be sticking that the UK is not doing enough domestically and may not be doing enough on a global policy scale.
Thank you both for joining us. An important story. I know that will dominate the airwaves this week. Rosalind Matheson and our very own London Bureau Chief Ruth David. Now, the far-right Alternative for Germany party also nearly tripled support in municipal elections in the industrial state of North Rhine-Westphalia. Both ruling parties lost ground, intensifying pressure on Chancellor Friedrich Merz's government to revive growth and deliver on spending plans. Now, we're joined by Christoph Hauwald, our Germany Bureau Chief. Christoph, according to preliminary results, the AfD increased its share of the vote by 9.4 percentage points. Was this expected?
Yes, good morning, Francine. This was largely as expected to some degree. At least there were some political observers out there who actually predicted like an even bigger gain for the far-right AfD, as you just mentioned, since they were the strongest party in terms of like gaining support in the state of North Rhine-Westphalia. But overall, the result was still below what the far-right AfD had actually achieved during the federal election in February. Now, with the municipal elections, there are like different topics that mattered for voters, but there were some people who actually had predicted even stronger gains for the AfD.
So what does this result actually mean for Chancellor Merz's government?
It definitely adds pressure on Merz and his government in Berlin. Merz has actually pledged to push through some very meaningful and deep economic reforms to revive economic growth in the second half of the year and next year. And in the last couple of weeks, he largely seems to have like focused more on like foreign policy matters than like the domestic situation. So with all the decisions on social welfare spending, bringing down energy costs, etc., that's really going to be a time for like Merz and his government to deliver going forward in the coming weeks.
Christoph, thank you so much. Christoph Rauwald there in Frankfurt. Now, coming up, we'll look ahead to the Fed's hotly anticipated rate decision this week and the host of other central bank decisions as well. This is Bloomberg. Now, the Federal Reserve is widely expected to cut rates on Wednesday, with investors focusing on how big the cut will be and the pace of future cuts. Now, there are also rate decisions this week from the Bank of England and the Bank of Japan. So let's unpack the week ahead with Bloomberg opinion columnist and senior editor for markets, John Authers. John, I wake up early in the morning, 5 a.m. London time. The first thing I read is your newsletter. It's always funny. It's always great. So congratulations on that. I know you've been focusing quite a lot on the Fed. What are you expecting this week, and what are we missing in the conversations that we have about the Fed?
Well, I think, and you don't need me, or it's fairly clear we're going to get a cut. It will almost certainly be 25 basis points. I don't think the inflation number that we got last Thursday was anything like weak enough to really give them the latitude to cut by 50 basis points, although I would imagine we have this fascinating legal soap opera of whether Stephen Miran is going to be able to take part in the FOMC. He's going to be, the Senate will be voting on whether he can join the FOMC later today. I think it's a racing certainty. Stephen Miran is currently Donald Trump's leading economic advisor. I think it's a rating certainty that if he does get to vote in this meeting, he will dissent in favor of cutting rates still further and try to make it that much more of an interesting deal. I think for the long term, there's a difference, quite a significant difference between what's immediately coming up, where I think everybody is quite confident there will be a cut, and the longer term implications for Fed independence. And with that one, I think it's more about the drama over Lisa Cook that really matters. And the fact that you don't really see this in the markets, but the fact that the administration is really seriously trying to get the right to have her fired in time so that she doesn't vote on this FOMC on Wednesday is very startling and suggests that we do have a very serious fight ahead.
John, you had a very good piece where you basically, talk about a possible third mandate from the Fed, the fact that maybe it's something on social and generational equity that they should be looking at. I mean, first of all, is the Fed still independent? Number one, and if there are question marks, why is the market not reacting? And should it have a third mandate to make a better society?
Okay. Answers on a postcard, please. Okay. The Fed is independent. The Fed is independent in the ways that that most matter for the time being. It's plainly under more explicit political pressure than it's been in some decades. But there's been a lot of commentary about this, obviously, in recent weeks. It's not as though Fed independence is sacrosanct or eternal, and the Bank of England back home in England, where you are, was completely controlled by the Treasury, or its rate-setting function was completely controlled by the Treasury until Tony Blair came along in '97. So it's not a total black and white issue. That said, the point I was trying to make in the piece over the weekend is that Scott Bessent is arguing that they've gone beyond their mandate, which is usually described as a double mandate for low inflation and low unemployment. It does actually say with moderate long-term interest rates, which is taken to mean bond yields, in the 1977 legislation that set that mandate. The fascinating point is that the Fed has actually succeeded very well for the whole of the last 25 years or so, with a very brief interruption with when they allowed inflation to get out of hand after the pandemic, and we don't like the results. That implies, obviously, that it's very serious inequality in the US and ever-growing social disenchantment. Now, I don't think there is any way an independent central bank staffed by relatively geeky economists can be expected to make very big societal calls about who should be the winners and the losers, about equality across society. That has to be something that politicians decide. It then gets very difficult if we've decided we actually want more from the Fed than what they're giving us, that we need more than what they've been mandated. That more or less inherently means they're going to have to be less independent of politicians, because they're going to be taking more precise instructions, and markets are inherently less likely to trust an elected politician who's got an eye to getting some votes than they are a central banker who's sitting in the same institution that Paul Volcker used to be in. So it's a cleft stick. It's obvious. You just need to go around the US with your eyes open to see that people aren't happy with the economy that's been created. But what do you do about it without compromising independence?
John, so your point is that maybe it's politicians that should have these discussions. It's not up to central banks.
Yes.
Is that fair?
Yes. Yes. This is the problem with central bank independence all along. They need to be given a very great degree of operational independence. And they need to be perceived as free from democratic voting pressures if they are going to be taken seriously by the markets. But you can't, they are very, very powerful. They have to have some degree of democratic oversight. There's no perfect answer to that. I don't myself think that the way that the current administration is dealing with it is a good way. This is a very dangerous approach. They're not going to Congress coming up with a detailed new white paper as to how they're going to change the composition. It's more of a straightforward legal arm wrestle, which is unhealthy.
Okay. John, thank you so much. And of course, John's latest column, it's a great title, A Big Not So Beautiful Inflation Picture. It basically goes to the fact that if you look at the conditions now, they're probably set for a cut this week from the Fed, but then the outlook is murky. I hope, John, you'll come back on TV tomorrow. John Authers, Bloomberg Senior Editor for Markets and Bloomberg Opinion Columnist. Now, coming up, stay with Bloomberg for coverage of Steve Miran's confirmation vote in the Senate, expected Monday evening in the U.S. That's later today. Up next, a Bloomberg Brief with Vonnie Quinn, and this is Bloomberg.